Okay guys, today again, now this is part 3. Remember part 1 was intro, part 2 was material, and part 3 is labor. Now the first thing also here you need to know is that when you're calculating labor variance, you are going to use 3 formulas, just like in material. As you all know, when you're talking about labor, the elements that you use is the rate and the hours. The rate and the hours. Okay. Now the 3 formulas. The first one is labor rate variance. That means our focus will be on rate. That means we are going to compare standard rate and actual rate. The second one is labor efficiency variance. Efficiency is nothing else but time. Is time. So you're calculating time. That means your focus will be to compare standard time and actual time. Just like in material variance, when you calculate material quantity variance, you extend the formula. Also here you also extend the formula. And then the last one would be total labor variance, just like in material, total material variance. So when you calculate labor rate variance, you compare, your focus is rate, you compare standard rate and actual rate multiplied by actual time that is worked. And then when you calculate labor efficiency variance, remember efficiency is time. So you compare standard time with actual time multiplied by standard rate, and then you extend that formula. How do we extend that formula? You extend only this part. How do you extend it? You say standard rate, standard time multiplied by actual units produced, just like in material variance, whereby you extended standard quantity, okay, minus actual times multiplied by standard rate. And then also with total labor variance, just like in material, you compare all the standard, you compare it with the actuals. That means the standard time with its rate, you compare it with the actual time with its rate. Okay. Or you can use another format of total labor variance instead of this one. You can use this one, depends on the question, what information you have. You can say labor rate variance. That means the answer that you calculated there plus labor efficiency variance, the answer that you calculated there. Okay, these two. Okay, I hope that is clear. Now let's go to calculations. Let's go to the next slide. All right. Again here, the information will be given to you. Standard information and actual information will be given to you. The only thing you do is to use the information given. Here, substitute it in the formulas. Right? Now you can check the example on page 92 and 93, which is example 3.4. Okay, for now let's do activity 3.4, the one we did with material variance on page 102. On page 102. Now let's calculate the labor variance. Sorry. Let's calculate the labor Let's calculate the labor rate variance. So our focus is rate. So we're going to compare standard rate and actual rate. So your formula is standard rate minus actual rate times actual time. Okay, now let's go to the exercise. So we're talking about labor. So you're looking at labor, nothing else, not material, not overheads. Okay, what is our standard rate? You go to the exercise in your textbook and check the under standard information and check for labor and standard rate. So there we have 3 hours of labor is used at 18 rand per hour. So the standard rate is 18 rand, right? Minus actual rate. So this is 18 rand per hour. So also the actual rate must be per hour, not in total. So minus, let's look at actual rate. Go to actual results, actual information, and look for anything talking about labor. So they say 1,760 labor hours were used at a total cost of 35,200. Meaning these people worked 1,760 hours and then they were paid 35,200 rand. But we are not looking for the total. We need to know how much they were paid per hour. So this is not per hour, this is 1,760. So how do we calculate per hour? We take the amount that were paid, 35,200, divided by the hours that they worked. Right? There. And then multiply it by actual time. How much actual time was worked? Go to actual information, actual results. Look for labor. How many hours did they work? 1,760 labor hours were used or worked. So the hours worked were 1,760. So you do the calculations, 18 rand. This divided by this, it's 20 rand times 1.760. Okay, so you can see from here, from the brackets, whether your answer is going to be favorable or unfavorable. So this is actual, this is standard. Actual is greater than standard. Okay, so meaning according to standard or according to planning, per hour we're supposed to pay an employee 18 rand, but we actually paid per hour 20 rand, meaning we had to add 2 rand more, and it's not favorable for the business. That extra 2 rand would have been used to buy something else. So 18 minus 20 is minus 2. You can see from the minus that the answer is going to be unfavorable. And when you multiply that by the hours, then you get minus 3,520 rand, which is unfavorable. So by paying extra 4 rand per hour, that means we have lost 3,520 rands that we would have used it something else. Okay, I hope that is clear. Please don't forget, your answer, you must give a clear analysis of your answer. So when you give your answer, you must say whether it's favorable for the business or unfavorable. Okay, so you must write it like this: is unfavorable variance or favorable variance. Otherwise, if you just write the answer and then you don't say whether it's favorable or not, that is wrong. Okay, let's go to the next slide. The next slide, we are going to calculate labor efficiency variance. Remember, we said efficiency is about time. So we are going to, our focus is time, and we are going to compare standard time and actual time. Okay, this is the formula. Standard time minus actual time minus standard rate. Okay, remember we said when we calculate labor efficiency, that means time, we have to extend this formula. Okay, how do we extend it? We only extend this part, standard time. How do we extend it? You say standard time times actual units produced minus actual time multiplied by standard rate. Okay, substitute. Let's go to the textbook and go to check how much is standard time. So you go to standard information, look for labor because we're talking about labor, and look what is our standard time. So when you look under actual standard time, under standard information, you see there under labor it says 3 hours of labor is used. So our standard time is 3 hours. So our standard time is 3 hours. Okay, multiplied by actual units produced. So you go to actual information or actual results and check how many actual units were produced. 450 kg of wool was purchased at the price of 3.6. 600 jerseys were made using 860 kg of wool. So how many units were actually produced or made? 600 jerseys. So our actual units produced is 600 minus actual time. What was the actual time worked? Go to actual information or results. How many hours actual units were worked? Is 1760. There you go, multiplied by standard rate. Okay, go to standard information and check for standard rate. 3 hours of labor is used at 18 rand per hour. So our standard rate is 18 rand. There you go. So you do your calculation, get 1.8 minus 1.760 multiplied by 18 rand. So you can see from the brackets which one is bigger. The standard, okay, standard time is more than actual time. So you can see whether it's favorable or unfavorable. So when your standard or your planning is greater than your actual, then your answer will be favorable. For instance, here management planned that workers to produce these 600 units. They planned that they will work 1,800 hours, but they actually worked less than that, meaning 1,760, saving how many hours? Saving 40 hours. Okay, that is favorable for the company, and that 40 hours can be used to do something else. All right, multiplied by 18 rand, which is the rate, and then we have 720 favorable variance, meaning because we have saved 440 hours, we have saved 720 rands. Okay, right, I hope that is clear. Okay guys, let's go to the last slide for labor. Okay, now we are going to calculate total labor variance. So our focus is total. Okay, and then we set the formula for total. You compare the standard with the actual, meaning the standard time and with the standard rate, and also the actual time with this actual rate. Okay, how much is our standard rate, standard time? If you remember from the previous slide, our standard time when we calculated it was 1.8, and our standard rate was 18 rand minus actual time, and then actual time, if you remember, was 1.760 multiplied by actual rate, and actual rate was 20 Rand. So you do the calculations. You can see from here whether we're going to have a favorable or unfavorable variance. This is actual, this is standard. Actual is greater than standard, meaning we are going to have an unfavorable variance of 2000 minus 2800 rands, unfavorable variance. Okay, or we can also use this formula instead of this one. You can use this one depending on the information given to you on the question paper. You can use this one. Total labor variance is labor rate variance plus labor efficiency variance. How much is our labor rate variance? Labor rate variance, when we calculated it from the previous slides, our rate was minus, our answer was minus 3.520, and then plus, how much was our labor efficiency variance? If you can remember, it was positive 720. So as you can see, which one is bigger here is the negative number, so the answer will be negative. So negative 3.520 plus 720 equals to minus 2.8, unfavorable variance. You see the answer here is the same as this one. Okay, so it depends on the information given to you when you calculate total labor variance, whether to use this one or to use this one. Okay guys, that's it. That's the end of labor variance. That's the end of labor variance, and that's the end of this part of labor. Then the next slide will be on manufacturing overhead variance. Okay, right, thank you.